Guys, this is really important, probably the most important thing you'll take from this. When you're new to Medicare, or let's say you've been on Medicare for a while, and the worst mistake I see are people that are 65 that go with like Blue Cross or United Healthcare ARP. They get a Plan F or a Plan G, and they're on that sucker for the next 10 years. What's happening each year is they're getting rate increase. And with the Plan F and the G, you get the highest rate increases, especially the Plan G, at least in Beaufort County. So these are standardized policies. If your agent's not calling you every 2 years to try to change you, if you're healthy enough, you're losing thousands and thousands over a period of time. What happens is if you let's say you're with Mutual of Omaha for 3 years. Great company. I use Mutual of Omaha all the time. But I certainly don't have someone on Mutual of Omaha from the time they're 65 to 75, because the problem with that is rate increases. You need to change every couple of years. Every couple of years, you need to change supplements to reset that rate. And this is and just remember, this is right here. Medigap policies are standardized or identical. Insurance companies can sell you only a standardized policy identified by letter. We talked about the N, the G, the high deductible. How do I compare Medigap policies? Different insurance companies charge vastly different premiums for the exact same policies. You're shopping a policy, make sure you're comparing a G to a G, the same lettered plan, N to an N or F to an F. All right, so I'm going to leave on this. I'm going to show you something right here. All right, guys, real quick. So 73-year-old male, Plan G. What are we looking at? Lowest. And now remember I said here, different insurance companies charge different premiums for the exact same policy. Really? Well, let's see. For a 73-year-old male, Plan G, $113.59. We could keep going down if you want. Aetna's $150. Blue Cross, $178. But I like my Blue Cross. They pay all my claims. I've never had to pay a bill. Here's the thing, guys. Medigap policies are standardized. They must follow state and federal laws designed to clearly identify themselves as a Medicare supplement. They must offer identical benefits. They all pay your claims. Doesn't matter if it's USAA, ARP, Allstate, they're identical plans. So, I don't like that when I hear that. Well, Chris, they've always paid. They've been good to me. They haven't been good to you. Allstate's $113, Blue Cross is $178. But here's the thing. I know some of you are saying, hey, wait a minute, Chris. I'm a 73-year-old male. I'm not paying $135 for Mutual of Omaha. I'm paying about $180. Actually, $185 if you started when you were 65. Why? Because the rate increases. This is for the $135 for Mutual of Omaha. Is someone that just is brand new at age 73 that's healthy, that just passed underwriting, they get $135. So if you've been on Mutual of Omaha since you were 65, you got rate increase. You're going to pay more like $180, $185. I just took somebody off that was 73 years old here in Beaufort County. He was paying right around $184, $185. He's been on Mutual of Omaha since he was 65. I put him on the Humana. We got him down to $119. Not bad. From $185 down to $119. So don't yell at me. Chris, I'm paying $185, not $135. It's because you've been on it for a while. Your agent's lazy, hasn't communicated with you. Yeah, stick with stick. It pays your bills. They all pay your bills. This is the kind of insurance it pays to change every couple of years. Or on your policy anniversary date, you get a letter that says, I got 12% rate increase. And just for blanks and giggles, if we look at the Plan N, take a look at the Plan N. And this gap between the G and the N rates is going to widen, guys. It has to, because of the healthy guaranteed issue people. So what are we looking at? Wow. You can get down Allstate, $86. Humana, $93. Medico, $95. So as each year goes on, N is going to go up 0, 3%. Most of my clients are experiencing 0 to 3% rate increases. Plan G, they're looking at much larger rate increases. I did the math. For somebody who was on Mutual of Omaha, which I like Mutual of Omaha early on, but you got to change to reset those rates. All right? So Mutual of Omaha's Plan N, very stable. Mutual of Omaha's Plan G, not so much. You got the rate increases because remember, Plan G has got to absorb the high cost of sick folks who are moving to Bluffton, to Buford. They have an Advantage Plan. They made a mistake. Their agent was financially incentivized to sell a Advantage Plan. We make $605 on a new to Medicare for an Advantage Plan. We make half that, less than. We make, for Advantage Plan, you're looking at $603. I get 22% of the annual premium for a Medicare supplement. Comes out to about $240 commission. You don't pay that to me. The insurance company pays separate to me. Whether you go direct to the carrier or you use an independent broker, you're going to pay the same premium. It's just like house or car insurance, all right? So why not have a Medicare advocate that's going to actually take the time every couple of years to see if you're okay, to see if maybe it's time to make that change, to reset those rates, all right? So that's all I got. And if you look below, there's a subscribe button. I would love it, guys, if you could just hit the subscribe button and be a part of May River Medicare Insurance. You can see the videos. You'll be alerted when we have our next video. I've been cranking out 1 to 2 a week. Would love the chance to do an analysis of your current situation. Just remember, we got till March 31st. If you have a Medicare Advantage plan and you're ready to change to a supplement, all we got to do is get you a policy issued. Once we get it issued, we would switch from your Advantage plan to a Medicare standalone Part D drug plan, which will kick out that Advantage plan, and you got real insurance starting on April 1st. All right, you guys have a great day.